Okay, can we start?
Yes, sir.
Yes, sir.
Just write one committee, SS Kohli committee. SS Kohli. Okay? SS Kohli committee, KOHLI. SS Kohli committee on willful defaulters. On willful defaulters. SS Kohli committee on willful defaulters. Defaulters we discussed yesterday, no? They have the repayment capacity but they are not paying, or they are diverting the funds, or they are actually selling the collateral. So these are the willful defaulters. So this committee recommended, it suggested that, just write one line, this committee suggested that certain restrictions should be imposed by RBI and SEBI on such defaulters. Certain restrictions should be imposed by RBI and SEBI on such defaulters. Restriction means there should not be any borrowing, like at least 5 years. Okay, so at least 5 years there is no borrowings, or there should not be no new company floating. Like this is by RBI, so RBI can issue guidelines or restriction. There should not be any borrowing. Then SEBI can issue restrictions like there is no new IPO. What is IPO, what is FPO, I have told you already. We will discuss in the next session, coming session we will discuss. So that means no new floating of companies is possible. Okay, then no takeovers, no management or director if there is a willful defaulting. So these restrictions can be imposed by RBI or SEBI. Okay. Next concept you write, non-cooperative borrowers. Non-cooperative borrowers. Non-cooperative borrowers. These are defaulters on bank loans. These are defaulters on bank loans who do not provide information about their assets, who do not provide information about their assets and create hurdles in the recovery process. And create hurdles in the recovery process. Okay. This IBC I will discuss later. Insolvency and Bankruptcy Act I will discuss later, 2016. So now you give another concept, bad bank. Bad bank. Okay. So bad bank, it is not yet finalized, it is actually proposed. So bad assets of the public sector bank. Bad assets means we have understood what is bad assets of the public sector banks will be transferred to bad bank. So this is similar to ARC, asset recovery, asset reconstruction company we have discussed yesterday. So it is similar to ARC. Okay, so in ARC it is negotiation, but here government decides the price. So if bank is transferring to ARC, I have told you it will be transferred at the discount price. So this discount price is fixed based on this negotiation, right? Between them there will be a negotiation and the discount price will be fixed, and then ARC will recover it through legal means. The advantage for bank is the balance sheet can be cleared off. Okay, so that is the advantage for bank. But here there won't be any negotiation. It is the government will fix the rate at which this assets will be transferred to the bad bank. So that is actually proposed but not finalized. You write one line, it will be created by transferring the bad or stressed assets. It will be created by transferring the bad or stressed assets of public sector banks. Of public sector banks.
Sir, can you repeat some technical issues?
It will be created. No problem. These are not important. This is not important concept. Anyway, we are discussing about NPA, so I'm just covering these parts also. Not these are. Nobody will ask you these questions, but I'm just taking it. That's it. So even if you miss it, okay, no problem. It will be created by transferring the bad or stressed assets. Transferring the bad or stressed assets. Stressed assets are the loans, okay, of public sector banks. Now we will see the advantages. You can write the advantages. It will clean up balance sheet of the banks. So clean up of balance sheet of the banks we have discussed yesterday. I've told you either you can write off or you can give it to ARC. So this is another proposal. You can give it to bad bank. Okay. So it will clean up the balance sheet of the banks. Second, it will enable PSB to. It will enable public sector banks to resume normal lending process. It will enable PSBs to resume normal lending process. So can anyone tell me how? Because when I've discussed about balance sheet issue yesterday, okay, if you are writing off, what will happen? You have to infuse more capital, right? Why you need to infuse more capital? Because when you write off the loans, what will happen is actually the CAR ratio will come down, right? CAR will come down. Capital adequacy ratio will come down. So if you need to maintain that ratio, you have to infuse more capital. So if this loan is actually given to bad bank or ARC, then you will get some fund. So that can be used for the capital infusion. So you can start the lending process like that. Next point, it will improve credit rating of banks. It will improve credit rating of banks. Next point, it will professionalize the recovery process. It will professionalize the recovery process. Okay, now you write disadvantage.
So all this we are writing under a bad bank, sir?
Yeah, bad bank. The advantages of bad bank. No, maybe in case if you get a question on NPA, you don't want to write all these things, you can say there was a proposal on bad bank, so that instead of ARC, the government will take over this issues. Like that you can say. Maybe one line, that's it, that's enough. So now disadvantages. It will encourage the indiscriminate or non-responsible lending by the public sector banks in future. It will encourage indiscriminate or non-responsible lending by PSBs in future. How will it happen? You understood, right? Because when there is a possibility that you can write off the debt by getting some money from the government, then you will give excessive lending, right? Then you will go for excessive lending. So that's what is written here. It will encourage indiscriminate or non-responsible lending by PSBs in future. Next point, fiscal burden on government. Fiscal burden on government. Okay, because government is paying here. Third, moral hazard. When we discussed about ARC, if you remember, I have discussed mostly ARCs under the private sector, and even I've told you the foreign investment is also promoted under ARC, but here it is completely government. Okay, so these are the two main disadvantages or criticisms you can write there. Now, so that's about the NPA related question. Mains expected question, NPA related is essay also possible, so you need to have all these contents with you. Then the way you write is what matters. Next topic, very important concept, financial inclusion. Very important from essay also and from GS paper 3 also. Financial inclusion, prelims also. So very important concept. It refers to the process of various financial services like microcredit, micro insurance, etc. Okay, various financial services. It refers to the process of various financial services to all sections of society, especially vulnerable sections of society, through institutional sources at affordable cost. Through institutional sources at affordable cost. Okay, now the problem is here, if you go for institutional sources, you can solve the problem of money lenders, right? Otherwise, these small, like the poor people, especially the marginalized and the vulnerable section, they go after money lenders for any needs or any requirement. For example, when we talk about farmers case, okay, so most of the farmers suicides are because of the high interest and high indebtedness which is created because of the money lenders. So there was a committee, Deepak Mohanty committee. I will be discussing about that committee when we discuss about agriculture. So he said instead of giving subsidies and all, you should make sure that farmers are getting proper loans from institutional sources. Getting loans from institutional sources is more important than giving subsidy or a concessional credit. You're talking about some 5% rate or 6% rate or 8% rate, etc. for farmers. You're talking about priority sector lending and all those things. Very low interest rates loans you are focusing on. The very low interest rate loans means it is actually subsidy, right? Credit subsidy you are giving here. But rather than focusing on subsidy, make sure that all the farmers are getting loans from the bank. Even if it is at 15%, it is okay. The reason or the logic behind this is you are offering loan at this very small interest rate, let's say 6% or 8%. Who's getting the benefit? It is a big farmers who's getting the benefit. The banks will lend to the big farmers. So the poor farmer or the marginal farmer is not getting the loan. So for them, even if you are giving at 15%, it's okay, but make sure that you are getting it from the institutional sources. The reason is money lenders, if you see, money lenders will tell that we will charge 10% interest or 8% interest. So these people will get trapped with the money lender. But money lender is saying this 10% or 8% for per month, and nobody realized that. But bank, this 15% is per year. When we calculate interest rate, when it comes to banks or normal situation, it is per year, right? But money lenders say calculate on the basis of per month. So if you are saying 10% or 8% per month, means per year it will be 96%. This is almost double. So effectively you are paying 96%, here it is 15%. So the question is, which one is better, subsidized credit or institutional credit? Institutional credit is more better, even though you are paying this 15%. You don't focus on this 5% or 6% because these are not given to the poor people. These are given to the big farmers. Okay, so this is one thing which has to be taken important care when we go or when we discuss about financial inclusion. So access to credit, access to insurance. So Deepak Mohanty committee also says that you should go for insurance for farmers. Instead of the subsidy, the money which government spend on subsidy, do that for the insurance. Give insurance to farmers. So that we will discuss anyway later. Now, under this definition, you can write benefits of financial inclusion. Benefits of financial inclusion. It is crucial for inclusive growth. First one, it is crucial for inclusive growth. Crucial for inclusive growth. It will save the weaker section from money lenders and Ponzi schemes. Ponzi schemes, some investment schemes, mostly the poor people will be trapped under the schemes. So it will save the weaker section from the money lenders and Ponzi schemes. Okay, see the line which I have told you before, if possible, any question which is asked on financial inclusion, you should be in a position to write that line. It is, which one is more better? It is more than subsidized loan, access to the credit is more important, access to institutional sources more important. Okay, so even if it is at 15%, you should make sure that each and every small farmers have access to the institutional credit. I hope you got the logic, because otherwise these people, when they are depending on the money lenders, you end up paying 96%, or if it is 10%, 120%, etc. you are ending up paying the interest, and ultimately that lead to rural indebtedness, poverty, inequality, and all those issues. So access to credit is more important, and access to formal credit is more important, or access to institutional credit is more important than giving subsidies. Okay, so next point, it will enable mobilization of savings of weaker section. It will enable mobilization of savings of weaker section for capital formation. Mobilization of savings for weaker section for capital formation. Next point, microcredit will facilitate skill development and employment generation. Skill development and employment generation. Next point, it will enhance social security. It will enhance social security against contingencies. In bracket, if you want, you can write illness, accident, etc. Okay, because my insurance is what we are talking about. Insurance is also part of financial inclusion. Microcredit and micro insurance, both are there. Okay, both we are talking about credit as well as insurance. So you write there, it will enhance social security against contingencies, in bracket, illness, accidents, old age, etc. through micro insurance and micro pension. When we talk about old age here, see, financial inclusion, microcredit, micro insurance and pension, all these will come. So I will discuss various schemes for credit, various schemes for insurance, various schemes for pension. Okay. Next point, it will reduce leakages in government developmental expenditure. It will reduce it will reduce leakages in government developmental expenditure by enabling direct benefit transfer. Direct benefit transfer. Next point you can write under that, women empowerment. How women empowerment will come? Because head of a family will be the beneficiary. Okay, even when we discuss about Food Security Act, then also I will tell you the distribution through PDS, the ration card, the woman will be the head of the family or the household. So women empowerment also you can write there. Okay, now indicators of financial inclusion. Next heading, next point, indicators of financial inclusion. So you can write a committee name there, Nachiket More Committee. Nachiket More Committee 2014. Okay, according to this committee, you can write 60% of the individuals do not have functional bank account. 60% of the individuals do not have a functional bank account. Okay. So
this data should have changed by now, no? Jandan account and etc.
No, Jandan account, I'm going to discuss about Jandan Yojana. That's why I'm discussing this Nachiket More Committee.
Okay.
Okay, so we will be discussing about Jandan. So now one more you can write under that, 42% households do not have bank account. This is after Jandan Yojana. 42% households do not have bank account. One more information you can write there. 90% of small business units do not have access to formal credit. 90% of small business units do not have access to formal credit. That means if you try to borrow from banks, you need a lot of KYC norms, a lot of documents has to be submitted, and you won't get loans easily. Maybe you don't have collateral, so they will ask for more collateral, more margin is required. So all those issues are there. So 90% of small business unit do not have access to formal credit. Okay, next point, credit to GDP ratio is just 70%. Credit to GDP ratio is 70%. Okay, in case of China, it is actually more than 200%. See, even this is also not desirable. High credit to GDP ratio is also not desirable, because this shows the companies are highly indebted. Here the problem is companies are not getting credit. Here the companies are highly indebted, getting more credit. Okay, so there has to be a mid-range. Low is also not good. In India's case, it is low. High is also not good. This shows the vulnerability of the banks as well as the company, because the companies are so highly indebted. Okay, if it is low, means what is the problem? It affects the capital formation, it affects the investment. So this is a problem in case of India. Now, indicators we have written now for problems in financial inclusion. Problems. First one you can write: inadequate financial infrastructure. Inadequate financial infrastructure. What do you mean by this? Inadequate financial infrastructure means what?
Bank accounts.
No, banks, basically insufficient bank branches, ATMs and all those facilities. Okay, to cater to the big population and big country, you need more and more bank branches and more ATMs and all those facilities, and that infrastructure is not there. Next you write documentation and complex procedures. Documentation and complex procedures. Next point you write limited financial literacy. Limited financial literacy. So if the question is about financial inclusion, whether it is essay or in GS, first you have to define, and then some indicators you need to write, one or two, then some issues you need to have, and then what are the reforms. Okay, mainly I am interested in discussing reform. We will talk about pre-reform period, what are the major reforms like nationalization, etc., and post-reform 1991 onwards, what are the changes which happen. All this we will discuss, but here we will just discuss few problems with respect to financial inclusion. One more you write convenience and affinity towards informal sector. Convenience and affinity towards informal sector. What do you mean by that? You go and ask to money lender.
Moneylenders is easily accessible.
Immediately.
They're easily accessible.
Yeah, easily accessible, no documents, because that person is near to you, that person is known to you, and anytime he can come to your home and get money also. So easily accessible. So familiarity also. All these are convenience and affinity towards informal sector. Next point, lack of pull factors. Lack of pull factors. What do you mean by that? So DBT is actually going to solve this problem. DBT is creating a pull factor. DBT is actually going to act as a pull factor. So can anyone tell me what I mean by this pull factor here?
So attraction towards bank accounts.
Yeah, because if you ask someone to open bank account, if government is saying please open bank account, the person will say I don't have money. What is the point in opening bank account? I may get 100 rupee per day, and that is only for the expenses of that particular day. So there is no point in opening bank account. But if you start giving the benefits through the bank account, then people will start opening the bank account. So DBT is actually a step towards promoting that or creating a pull factor. So it has to be seen not just to avoid the leakages. This has to be seen in a wider context, and this will actually act as a pull factor. Okay, that's the more important reason here when we discuss about DBT. Okay, You can write there, that is incentive for availing financial service. Pull factor in bracket, you can write incentive for availing financial service. You can write DBT also there. Okay, next point, unaffordable financial products. Unaffordable financial products. Okay, so unaffordable financial product means, for example, pension. If you talk about, if you need to get pension in future, you have to invest now, right? You need to pay now, so that premium you need to pay. So even you don't have extra money to pay, you have only survival money, so there is no question of keeping premium or paying for the future. So that is also considered as a problem. We will discuss about this Adal pension yojana and everything. Okay, so we can see here there are supply side factors as well as there are demand factors. So supply side factors is what we have discussed about, availability of the infrastructure and all these things are supply side factor. What is the demand side factor? That pull factor we have discussed, no? There is no demand actually to avail the service. So supply side factors actually you can solve through making available and providing services, etc. That way you can solve this. Demand side factor you can solve through DBT, such kind of measures. You got me? So this is how you need to write. If the question is asked, you have to say these are the supply side factors, these are the demand side factors, and these can be solved through these means. Like that you should be in a position to write. Okay, now next is measures to promote financial inclusion. Measures. So in that first one you write pre-reform era. Which one is the most important one? Pre-reform era? We have already discussed that. What's the most important reform in pre-reform era? Shivangi, what's the most important reform in this regard to ensure financial inclusion in pre-reform era?
So license.
Nationalization of banks.
Nationalization of banks.
Nationalization, sorry.
Yeah, right there. Nationalization of banks. Nationalization of banks and financial institutions. Nationalization of banks and financial institutions. So like banks, I've told you already, 1969 nationalization started. Then various financial institutions like life insurance company, LIC, GIC, general insurance company, etc. again nationalized. This also we will discuss when we discuss about financial institutions. So LIC was nationalized in 1950 or 1956. 1956. GIC in 1970. So nationalization is the most important measure that you can see in the pre-reform era. Second one you can write lead bank scheme. Lead bank scheme. Again a prelims question. This was a prelims question. The lead bank scheme in 1969. So you can write a scheme there. I will explain that. In every district, a bank is assigned. The status of lead bank. Such bank has to coordinate. Activities of other financial institutions and banks to promote financial inclusion in that district. So like one district, there will be one bank which will be given the status of lead bank. Mostly it will be SBI only, but it is allowed in private sector also. In private sector, ICICI is actually the largest lead bank scheme, okay. So SBI will act as the lead bank and SBI will directly report to NABARD, okay. So before the NABARD, I will discuss when it was established and all. So it was in 1982. Before that, it was directly to RBI. As I've already told you, the scheme was introduced in 1969. So once NABARD was established, then to NABARD, but before it was to RBI. Okay, so SBI is the largest, and when it comes to private sector, ICICI is the largest. So you can say SBI and ICICI. They are known as DSIB. DSIB. DSIB means domestic significantly important institution. Bracket you can write. Domestic significantly important institutions. That means these two banks are very important considered from the point of view of entire system. Okay, so that's why domestic significantly important institution DSIB status is given. Why DSIB status? Because this is important for the entire system. The entire system depend on these two banks basically. So if these two banks go bankrupt, the entire financial system will be affected. So what do you think? The norms for these banks will be liberal or more stringent?
So more stringent.
It will be more stringent, because if these two banks are affected, the entire system will collapse. So DSIB status means the rules and norms are more stringent for these banks. So these banks will act as the lead bank. So lead bank scheme means they will take care of, they will coordinate the other financial. There may be other banks also in the district. So all these will be coordinated by the SBI or ICICI, whoever is the lead bank over there. Okay, very important.
So who does ICICI report to?
No, NABARD only, same. If it is in that context, both will be reporting to NABARD.
NABARD.
I am saying this is one district. In some other district, it may be ICICI. I am saying private sector can also be. So in that context, ICICI will report to NABARD. Earlier RBI, but 1982 onwards, NABARD. Okay. Third point you can write service area approach. Service area approach. So you can write it was initiated in 1988 as a component of lead bank scheme. As a component of lead bank scheme. Under this, banks have to adopt a cluster of 10 to 15 villages, for promoting financial inclusion. Under this, banks have to adopt a cluster of 10 to 15 villages for promoting financial institution. Okay, so it is a component of lead bank scheme only. So it will go like this. Let's suppose this is the village. So there is a lead bank scheme already there, right? At this time, lead bank scheme is there. So let's suppose SBI is the lead bank in the district. But this district have many, villages, right? Like this, there will be clusters of villages. So these are different villages. So around 10-15 villages. So here there will be, let's say, a Punjab National Bank. Okay. So this Punjab National Bank will adopt this cluster of villages. That's what you mean by service area approach. And then this Punjab National Bank, as usual, there may be other banks also. Here there can be some other banks also. Vijaya Bank will be there, Indian Bank will be there, ICICI Bank will be there, HDFC Bank will be there. So all these will be reporting to whom? All these will be reporting to SBI only. So SBI is the lead bank in the district. So PNB will report to SBI and SBI will report to NABARD. Correct, no? So this is basically lead bank. Within that there is one more component. So now what I can say is what SBI do to the entire village, exactly the same will be done by Punjab National Bank in the particular cluster. Okay. Are we done? Is that okay?
Yes, sir.
Okay. So next one, PSL, priority sector lending. Priority sector lending. 1970.
So one question.
Tell me.
SBI will be leading how many clusters?
No, that is not clusters. Number of clusters is not specified.
Okay.
So,
So will it be divided
SBI,
area wise or something?
yeah, SBI will be leading the entire district. So SBI is taking, this is a district. Within district, there will be different villages. Like the clusters will be formed. And one bank have to adopt this cluster of around 10 to 15 villages. So that's what I've said, PNB. So that clusters are within the district. So PNB will take care of this cluster, and maybe some other, this is a different cluster. So this will be taken care by ICICI. Okay, so there may be another cluster. So within wherever SBI is standing, there can be another cluster which can be taken care by some other bank, HDFC. But all these will be reporting to SBI. That is what service area approach. And SBI will report to NABARD as usual. So what I am saying is, what SBI did to the entire district till now these banks are doing in the cluster villages. And SBI will coordinate, SBI will report to NABARD. NABARD will coordinate SBI, SBI will coordinate with these banks.
Okay, sir.
Yeah. What we said, okay, priority sector lending, it was introduced in 1972. Okay, actually we cannot say perfectly it was in 1972, it was evolved over a period of time, okay. So, but formally 1972, there is no need to remember the year in this context because it was evolved over a period of time. One concept you can write under that, PSL certificates. PSL certificates. Okay, PSL certificate means, let's suppose how much you need to lend under priority sector lending, 40%. Suppose one bank is giving 50%, okay, beyond your PSL. Now there is one bank, ICICI, this bank, this is SBI, okay. So SBI, the mandatory requirement is 40, ICICI also mandatory requirement is 40. But SBI lend to PSL 50%, okay. That means 10% extra is there. For this, they can issue a PSL certificate, okay, and this PSL certificate can be used by ICICI. So ICICI might have given 30% only. So to meet the target of 40, this certificate can be purchased by paying money to SBI. So PSL certificate is actually an incentive in a way, more lending to PSL. Okay, so just write, it will provide flexibility to banks. It will provide flexibility to banks in meeting their PSL targets, priority sector lending targets. Comma, through PSL certificates, excess lending to priority sector by a bank, excess lending to priority sector by a bank can be adjusted for shortfall of priority sector lending of another bank. For shortfall of priority sector lending of another bank. Okay, so I hope you understood this. Next, fifth one you can write regional rural banks. Regional rural banks, 1975. Regional rural banks in detail I'll explain when we discuss about next module, that is financial institution, banking and financial institution. I'll discuss there. Okay, so regional rural banks 1975, but actually the act was passed in 1976. We will discuss this later. Then you can write NABARD 1982. NABARD 1982. This also we will discuss. All these financial institutions will be discussed later. NABARD 1982. SIDBI. Okay. SIDBI 1990. So this is 1982. So regional rural banks 1975. So these three I will discuss later in the next module. So can I write cooperative banks also here? We are talking about measures for promoting inclusion. So can we write cooperative banks here? Can we write cooperative banks? What about cooperative banks? Can we write this?
Sir, yes, we should.
Okay. See, cooperative banks were there even before independence also. So we are talking about post-independence but pre-reform, right? 1947 to 91 period only we are discussing. That's why here we are not discussing about cooperative banks. But cooperative banks also is one of the institution which promote financial institution. Since we are discussing under that particular heading, I am not mentioning that here. Okay. Next, post reforms. Post reforms. That means post 1991. In that, the first one we will see the schemes for bank account. Schemes for bank account. So under that first one you can write no frills account was introduced in 2005. No frills account introduced in 2005. Okay, what is this no frills account? You can write under that zero or very low balance. Zero or very low balance account. Zero or very low balance account. Okay, so this is creating ambiguity. Very low means 1000 or 2000 or 3000 or 100, right? So next point to write under that liberal documentation. Liberal documentation. Okay, second one. So first one no frills account, second one you write in 2012 no frills accounts were renamed as, you don't want to write it as second one is different one, this is renamed. Okay, so in 2012 no frills account was renamed as BSBD. Can anyone tell what is BSBD? Basic saving bank deposit account. Okay, BSBD, basic saving bank account, bank deposit account. So this is a zero balance account. So this ambiguity is not there now. Very low balance means what should be the balance, that is cleared here. So zero balance. Okay, and know your customer, KYC norms required. KYC norms required Okay. Now, only 4 withdrawals per month. Only 4 withdrawals per month. Under that you can write only 4 withdrawals per month. And after that there will be charges. It is not that you cannot withdraw for 4 free withdrawals. Okay, write in that way. That will be better. 4 free withdrawals every month. Unlimited deposit. Earlier in Nofril's account there was a limit. So here unlimited deposit. Okay, next point. Under that next point, ATM provided. ATM. So actually Jan Dhan Yojana is using this account. Okay. So this is also known as Jan Dhan account. ATM provided. Value added services may be provided against reasonable charges. What do you mean by value added services? Check, ATM, etc. Right? So value added services may be provided against reasonable charges. Okay, so here you see here KYC is required. Now in case if KYC is not confirmed, actually only Aadhaar is enough, but still KYC is not confirmed, then there is another possibility, BCBD small account. You can write there BCBD small account. BCBD small account. So in that again zero balance, similar to this zero balance, but more restriction will be there. Here there are less restrictions, so you can write BCBD small account. So zero balance, but more restriction. Like maximum account balance should be 50,000. Okay, maximum account balance here should be 50,000. Here there was unlimited, there was no limitation on deposit. Here maximum should be 50,000. It doesn't mean that only 50,000 could be deposited. You deposit 50,000 and then once we withdraw, then again you can deposit. But there is a limit for withdrawal also. Okay, so maximum withdrawal 10,000 per month. 10,000 per month withdrawal. Okay, maximum deposit 1 lakh per annum. 1 lakh per annum. Okay. So first I said the maximum balance should be 50,000, but I said maximum deposit 1 lakh. So how will it work out? Now let's say 50,000 is balance. Okay, 50,000 balance. I have withdrawn 10,000, so 10 more thousand can be deposited. So 60. Then withdrawn 10,000, then another 10 more can be deposited. Like that, maximum deposit should be 1 lakh per year. Okay. And then one more point you can write, foreign transfers not permitted. Foreign transfers not permitted. Foreign transfers not permitted. Okay, so that's about schemes for bank account. Then okay, we will have to discuss about payment banks, small finance banks, or differentiated banks. That we will do tomorrow. Okay, any doubts here? Any doubts? Can we stop now?
Yes, sir.
So tomorrow no class, sorry, Monday we will do. Okay, Monday we will discuss the rest of the post-reform measures. So we will discuss about payment bank, differentiated bank, all these things we'll discuss. Okay, we'll stop here. See you.
Okay, thank you, sir.
Thank you, sir.